All right, Rob. Well, hey, welcome to another round of
Right.
Rock Talk.
Yep, we're back. I would say it's due to popular demand, but we both know that's not true.
No, it's been pretty quiet out there, so we'll see if we can amp that up a little bit and throw a little gasoline on the fire as we keep working at this. I'm excited to talk today about, we're going to hit on tariffs. We're going to talk a little bit about the potential Tax Cuts and Jobs Act getting extended
Yep,
and the impact of AI on the economy and the world and where that's going.
especially after that DeepSeek announcement, fielding a lot of questions on it.
Oh, yeah. That was a surprise right hook by China and
Yep.
a little out of left field there.
Sent markets reeling there for about a day.
Yeah. Little step back. So, well, let's jump on to tariffs. I mean, this is a hot topic that's on, I think, a lot of families' minds right now, because they're, rightfully, I think concerned about how that may affect inflation potentially.
Yep,
And bottom line, their pocketbook, right?
absolutely.
And what they're spending every day. So, when we're looking at kind of what's your take a little bit on how tariffs will affect stock prices this year and what's going to go on there?
It's a really good question. I think everyone's trying to figure that out. Broadly speaking, tariffs are just a tax, right? So when you throw more taxes on any sort of economic structure, in theory, in paper, and what we're taught in school is it's not good because all you're doing is raising prices. Ultimately, there's going to be winners and there's going to be losers. I mean, if you look at businesses that have typically done well under protectionist policies, you get a lot of defense companies, some manufacturers. You look at companies that are more home-based, and we'll probably go into that a bit more, like small caps, right?
Yep.
You look at businesses that typically haven't done very well, automakers, consumer discretionary, think of the Nikes of the world where they're importing a lot, would probably think that a lot of these policies, those businesses wouldn't do quite as well. But ultimately, what we've seen, so tariffs aren't anything new. The United States has a very long history of them. Even when you go back to the first Trump administration, when tariffs were first put out there,
That's right.
Look at what markets have done.
Right.
I mean,
Markets did great, and there wasn't a big impact on inflation on our bottom line on that end.
No, other than 2022, markets just ripped. I guess at the end of the day, tariffs should be inflationary, and they, depending on what actually gets put into place, they will be inflationary. But we've been in an inflationary environment for some time now.
We have, and I think the media really gets after this, and they want those tariffs. They want to build it up as a bad issue in the headlines, but I think tariffs really have more bark than bite, oftentimes.
Yep.
And to your point, when we look at like the Mag 7 last year did great. They've been more of a drag on the market this year, and I think that we talked about it, during our last episode, that we think maybe more of a broadening out of the market this year, where more small cap and mid cap stocks will probably do better. And I think these companies, some of those other companies out there, it gives them an opportunity to step up and be a place that the consumer turns to. And and I think one of the misconceptions about a tariff is that a tariff, you're exactly right when you said it's a tax on a good, which causes the price of that good to go up, but it doesn't cause inflation. What causes inflation, I love this definition that I came across, a while back, so that we understand how inflation works. So inflation isn't an increase in the price of goods and services. It's really the decline in the value of your money caused by banks simply injecting more money into the economy. And
Yep. For those listening at home, the M2 money supply.
yes, that's exactly right. It's M2. You want to see what inflation is doing. Look at the supply of money that's circulating in the system. Is it going up or is it going down? When there's a tariff on a good that causes a tax, that doesn't put more or less money into the system,
Yep.
right?
Yep.
It simply causes that particular good to go up in price, right? Now, what as a consumer, we have options though.
Yep.
Right? Let's say that causes a certain brand, maybe Nike that you mentioned, to go up in cost. Well, it doesn't mean that I have to spend my money on Nike.
Yep.
I can go to a different product and spend my money that wasn't impacted possibly by that tariff.
Companies with purchasing power are going to do well over any environment. That's usually why there are premiums attached to those businesses.
Yeah. And I think one of the when we look at a lot of our clientele who aren't buying cars regularly, aren't buying homes, regularly and so forth, right? In some areas of their life, they're less impacted by inflation. Maybe they're more impacted when they get into retirement when it comes to healthcare costs,
Yep.
which those tend to rise, quite significantly on an annual basis, but probably aren't going to be impacted by tariffs.
Agreed. It goes back to all of the arguments in the data that says everyone's inflation rate is inherently different based on what you're buying.
That's right. That's right. So, when I'm looking at this, and we'll get into it here in a moment, maybe as we talk about the Tax Cuts and Jobs Act, maybe where we have a little bit more of an evening out, where maybe in some areas of the economy prices do go up. But if we look at that Tax Cuts and Jobs Act, how that may impact families with more money to actually spend because of lower taxes and extension of tax cuts and so forth, that overall there's more of an evening out of everything. And we'll maybe hit on that a little bit more here in just a moment.
Yeah. In fact, we can go there. Do you have any final thoughts on tariffs?
On the tariff piece, when we're looking at increasing that tariff on with some goods from China, from Mexico, from Canada, and so forth, one thing I looked at this week was, the U.S. imports when it comes to petroleum, the top 10 countries out there, we import more from Canada, significantly more than any other country. And, yes, we can put a tariff on those imports, but, and when we look at it, Canada can retaliate with some different areas, but without us purchasing that oil, that would impact their economy big time.
Yep.
And so when we look at it, I think these tariffs, it's more of, and I think we all know this, is that it's more of a bargaining chip and tool to get things done.
Certainly seems that way.
Yeah, because other countries like Canada really rely on us to purchase that petroleum from them. Right.
And I think that's what makes everyone wants to know at the end of the day, what is this going to do to them? How is this going to affect them? Still too many pieces out there because I agree. What actually gets put into place can be completely different than what's being talked about now. Could be some positive things that come out of it, or could be a big negative. So unfortunately, we just need to stay tuned. I always, when I discuss tariff with clients, I discuss it in the lens of just another corporate tax and how is it going to affect them. Well, I mean, can corporations pass on all of their corporate tax rate to their consumers? No, not all. It's somewhere between 1 and 99, right? And unfortunately, that's where we are now, where we know there's going to be an effect. We just don't know what the exact effects are going to be.
Right. So we'll keep our eye on the ball. We'll see how that plays out. Again, I think at the end of the day, oftentimes the tariff piece has greater, bark than actual bite. So we'll see how that plays out. This next area, the Tax Cuts and Jobs Act, I'm excited about this to see where this is going to land.
Yep.
So what the administration has recently proposed is to extend the Tax Cuts and Jobs Act, which what that means is if we look at our tax rates back in 2017, what was changed when Trump was in office the first time is that tax rates were lowered. And those rates are set to expire or do what's called a sunset.
2026.
Yep, at the end of this year. So January 1st of next year, we're set to roll back to the previous tax code unless they get extended. And Trump has mentioned that he would like to extend that Tax Cuts and Jobs Act, but with that also added some really nice items to this. Now, they're still talking about this, so this has to get approved. We'll see what ends up happening. But if a number of these items can get passed along, this is meaningful for our clients and their bottom line at the end of the day. So real quick, I was watching a podcast over this past weekend, and there was a tax attorney I was watching that is pretty well known. He's got hundreds of thousands of followers, a couple more than us. We've got to work on that piece.
Got to work on that.
Right? But he was wrong on a couple items.
Like and subscribe to this channel.
Yes,
right,
like
Brian?
and subscribe.
Yep.
Right? For more accurate information, one of the things that he was incorrect about was, he was talking about how, let's say that you're in a 22% tax bracket and you would roll back to a 25 if that did not get extended. He said, that's a 3% increase in your taxes, and it's actually not. Right?
No.
If you know how to do math, it's actually a 13% increase. And maybe a more simple example is if you're in that 12% bracket and you roll back to a 15, well, what is 1/4 of 12? It's 3.
Yep.
Right? So going from 12 to 15 is actually a 25% increase in your tax bill.
That is a staple example in all of our workshops.
Yes, every time. And a 25% increase in your tax bill is significant.
That's a hit.
That's a hit, right? Instead of, let's say at the end of the day, you had a $10,000 check that ultimately went to the IRS that year as a tax bill, a 25% increase in that would take it up to $12,500.
Yep.
And no one wants to write that check, right? So when we're looking at this, if we can extend those tax brackets, that's meaningful for families. And whether you're single or married, it makes a big difference. And, with this, I think another item that that they're talking about, which this has to get everyone excited, if the government can do a better job of controlling, managing, and having some accountability to its spending, right? And if we can bring that spending down in some areas, this gives hopefully the government the ability to maybe not tax us in an area, which is on Social Security. This was an area that's proposed in this bill. And so with that, if there's no tax on Social Security, what a tremendous benefit for families. Now, we talk about this in some of our workshops also, and that is that if you're a married couple, the tax brackets start out at 10% and 12%. If you're taking Social Security, that most of your Social Security, you actually bypass that 10 and 12% tax bracket, you jump right to 22.
Yep.
Most of your Social Security as a married couple is taxed at 22%. And to relieve that pressure would be tremendous. Now, it even gets worse if you file single, right? This is a penalty for, and we call it the widow penalty, that when someone, oftentimes you lose a spouse and now you file a single tax return and that tax jumps. It really makes a big impact. So as a single filer, most of your Social Security is actually taxed at over 40%.
That's a big rate.
That's a big rate.
No one wants to do that.
No one wants to do that. So when we look at this, this is over $100 billion with a B, $100 billion of tax savings annually to the U.S. citizens by eliminating that tax on Social Security. So we'll see if that goes through or not. What a tremendous advantage when it comes to financial planning if that happens, to keep families in a much lower tax bracket and to have a lot of that base income that you need each month to pay a lot of those expenses and take care of everything around the house, basically not taxed. That would be a tremendous benefit for families. Two other areas that were mentioned there. One is the SALT tax, which is state and local taxes.
Definitely comes up for some of our clients living out of state.
It does. And when we're looking at this, the state and local taxes. So right now you can deduct up to $10,000 of state and local taxes. When if you remember back, everyone used to itemize.
Yep.
Now, for the most part, we take a standard deduction. Because when you itemize, when you take everything into account, those state and local taxes, you take interest on your home, those little things, it just doesn't add up.
Medical expenses, things like that.
Yeah. Typically, it doesn't add up to what the standard deduction would be.
Especially after they doubled it.
Right. So, in this case, if they increase that SALT deduction, the state and local taxes, where you can deduct a much higher amount, now families may go back to itemizing. And right now it has a $10,000 cap. They haven't clarified really how they want to handle that moving forward, but they have talked about in this bill that cap would be increased greatly.
Yep.
We could go back to itemizing. So that allows families to potentially deduct a lot more off their taxes, which could put them in a better spot. So we'll see how that plays out. And there's little things, this is a little item, I think, that I thought was interesting in this, where that they talked about the tax on carried interest, which is, when we get into hedge funds and how people, the money managers and so forth, pay taxes, that Trump was actually talking about increasing the tax on the wealthy through that tax on carried interest to help pay for some of this.
It's been floated, I think, every election cycle over the last 16 years or so, getting rid of carried interest. That would be a big move. If anything, with carried interest gets affected. Yeah.
So we'll see how all this plays out. Again, stay tuned on that. We'll keep you updated. But I think the two big items for our clients on a daily basis would be the extension of the Tax Cuts and Jobs Act. It gives us more years to do the Roth conversions versus being so aggressive right now. And Boy, the big one, which is no taxes on Social Security, which would be tremendous. So we'll see how all that plays out. Stay tuned on that piece.
Yeah. And it's interesting. I know Mike Johnson's trying to pass it as one big giant bill, and with the slim majorities in both the House and the Senate, I don't know if one big bill is going to get passed. But if it doesn't, I would think that they would just start passing smaller measures. So some of this will probably be enacted or extended, I should say.
Yeah, yeah. So we may see more of it trickle through where we get some of these done over time, but here in the coming months. But tremendous to the bottom line for the families that we work with every day, and would make a big difference for them. So how about AI?
Yeah, should we go there?
It's a big one.
DeepSeek.
So DeepSeek. I was thinking about this, and I'll kind of set you up with this. I was giving some thought to this, coming out of China, coming out of Asia. NVIDIA's been the big gorilla on the block here for a while. I kind of equate this a little bit to Mike Tyson from years ago, where he went over to Japan and got knocked out by Buster Douglas, who no one had ever heard of.
That was a great 30 for 30, by the way,
right,
for anyone that wants to watch it.
Yeah, it is. Buster Douglas, his life story is amazing. So is Tyson's, right? Both of them coming up out of nowhere. But then you have DeepSeek also coming out of Asia here to really, pound NVIDIA out of left field, give them a left hook that they weren't expecting, and that stock dropped 16% in a day.
Yeah, I think it shows you a couple things. One, how everyone's really worried about the concentration risk at the top. You and I, we've talked about this a lot. It's nothing new to our clients. And really what we saw were people were selling without asking any questions. The questions were going to come later. And throughout the next couple of days or so, I think we learned that maybe everything that we heard about it wasn't quite true, which I think a lot of people knew. I mean, how could you? It's called distillation, right? Some of our managers are much more fluent in this language than I am. But still, what they were able to do was pretty interesting. Something that came out of course, the couple days afterwards and in the aftermath, something called Javon's paradox, which I actually had to Google it or actually use ChatGPT now to figure out what exactly people were talking about. And what it is that the idea that increasing the efficiency of a resource can actually lead to a higher overall consumption of that resource. So people thinking, well, wait a minute, if these people can do it cheaper, maybe we don't need all these chips. When in fact, many people have come out afterwards and said the opposite is true. If anything, this is just going to keep driving CapEx spending on AI infrastructure up.
Right. Google just this past week earmarked a lot of money investing into their company.
I think I heard this morning on the radio that it was actually on Bloomberg that Microsoft's capital expenditures have tripled over the last few years. Which, by the way, fun fact, how much is Microsoft stock up over the last year? It caught me off guard, too.
Pretty flat.
It is pretty flat. Oh,
there we go.
Yeah, actually, I think it was slightly down.
I do my research.
Yeah, you do. But I had to think about that and actually double check it. But yeah, that's absolutely true. Yeah. So ultimately, what does this mean? I'm never going to say that AI is played out because in a lot of ways, I mean, how many years did it take the internet to become what it is now, and everything's ever evolving. When it comes to names like NVIDIA, I think the easy money has been made, but they should still do very, very well.
They should. I think it's probably a good buying opportunity. But one thing that jumped out at me with it is that, I think the message is clear with so many families that we see that are not clients that come in here, or maybe they're managing a little bit of a portfolio on their own, is that you take the single most impressive company in the world right now, NVIDIA, over the last couple of years, and their stock fell 16% in 5 days based on a risk that no one really saw coming, and that, is probably, going to fall to the side. But when you look at it, the S&P's up 62% over the last 25 months. And if the biggest stock can get hit like that, what does that say for the rest of someone's portfolio?
Absolutely.
There's a lot of concentration risk that we see every day where families come in here and they own just a few stocks because they're piling on that popular stock.
Everyone's going to sell first, ask questions later.
Yeah.
I also think we've talked about this a little bit, but why you still need active management. We still expect growth to do very, very well, but for example, the NVIDIA versus Microsoft, granted, two completely different businesses. NVIDIA is still probably going to do pretty well.
Yep.
Microsoft, I think what's giving people hesitation there is when you look at that CapEx spending, ultimately that just means less of a chance of shareholder return via free cash flow, buybacks, dividends, things of that nature. And I think that's giving a lot of portfolio managers cause is, how are these businesses going to be able to monetize the trillions going into AI infrastructure?
Right.
Ultimately, I don't exactly know what people have been telling me is we're going to get beyond this chatbot and we're going to get into agents where we actually have programs act on and transact on our behalf, and that's going to be the next iteration. But we'll see. But I think people are starting to question when that's going to come about.
Yeah. Again, it's a new area. Right. We're exploring oceans that have never, been explored before.
Yeah,
right. And so it's a new area.
So I think now best options for investors going forward is instead of tagging the Qs or the SPY because of that concentration risk, maybe go with active management. Yeah. Someone that's actually going to dig in and understand the technology.
Yeah. And there's a lot behind the scenes in that technology and a lot of things. There are a lot of sectors in the market.
Yep.
To really be taken advantage of, I think, as we move forward and as we, expand on this new frontier.
Yep.
And, everything from, there's some obvious areas with chip making and data centers, but behind it with water rights and electricity and a lot, maybe possibly even nuclear power. There's a lot of areas behind the scenes, little areas that, could be great areas to really focus in on.
We've talked about it before, how much we think infrastructure could be a really good place here on out.
Yeah, love that area. And, there's so much going on behind the scenes with infrastructure that when you dig into everything that to develop a data center, everything that's needed, all the components behind that, there are little individual components and sectors to dive into there that active management that has the time, the expertise, can go in and filter it out and find those little areas to take advantage of.
Yeah, absolutely.
Yeah. So, other couple areas maybe on the AI side, there are, of course, there's the job impact, and I think that's something that anytime anything new comes out, there's always the fear of the unknown.
Yes.
Right. You think of, Henry Ford,
Mm-hmm.
right, invents the car. Every person in the world that had a horse and buggy or that took people around town, the old taxis around New York, right, in a horse and buggy. All right, all these people are out of a job. What are they going to do now? Well, they become taxi drivers, right?
Exactly.
Or whatever it is, right?
I mean, there aren't elevator operators anymore, right?
No.
We survived that too.
Yeah, I think we know my kids know which buttons to push
Exactly.
when we get in. I don't know about yours.
Well, sometimes it's a little bit of task to them to push the right ones, but we're getting there.
Yeah. They turn into Buddy the Elf and just hit them all, and it turns into a Christmas tree. It's amazing. So, yeah, after they fight about who gets to push the button.
Exactly, right.
Yeah. So, with all this, I think the job area, I was a podcast I recently listened to. One of the things that they were talking about was, as we get more into self-driving cars, one of the concerns is you have all these, literally a couple million people that drive for Uber and Lyft on a daily basis just to make some extra income. And one of the concerns is, well, what happens to them to be able to go out and earn extra income? And you have actually a lot of talented people that do that.
Yeah.
And what could actually, I from the podcast I was listening to and what their outlook on it was more that it's going to make our economy better because you're going to have people in the workforce come back that are wanting more full-time employment or other part-time jobs. And you're going to have more talented people come back and invest that time back into our economy. And ultimately what we're looking at with AI is just in the long run, it's a more efficient, more well-run economy that this all increases our GDP and so forth. We want that GDP growth, and we get that from having a productive workforce.
Yep, technological progress is a real thing. I mean, look what happened with the internet, and we're still in the very early innings of AI. So it's going to be interesting to see where we're going to be in 10 years. And talk about GDP growth. We've gotten some good GDP growth headline numbers lately. So I kind of anticipate that to continue.
Yeah, I love where we're going with it, and it's fun to play with every day. Hop onto AI, and whether it's Chat GPT or whatever it may be, and ask it some questions and help us to, just give us directions in our daily life with different things, or here in the business and different things that we
Help you prepare for a podcast.
It helps me. Cheated?
Yeah, absolutely. Absolutely. I'm trying to work smarter, not harder.
I did too. I just wasn't going to tell anyone,
okay.
But no, it helped a little bit. So, hey, this has been great. We're going to keep doing this on a monthly basis. Give us your questions and let us know what topics you'd like to cover. And like and subscribe to this, podcast, so that way we can get up there to a couple 100,000 and get more exact and more accurate information out there instead of those are tax attorneys that can't do math yet.
Yeah, so, fair enough.
Yeah,
fair enough.
All right. Well, wonderful talking to you again, Rob.
Likewise, Kale.
Digging into this.
This is always fun.
All right.
Until next time, right?
Yes, sir. All right.